Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita, Khemka, and I have my colleague here, Yatin Mota, joining in. Yatin, of course, you know, the street seems to be saluting the Saffron wave that we saw in the state election results, and the cheer or the euphoria is clearly visible on the street. Given the fact that I've been asking experts, ab ki baar 21,000 to aa hi gaya. I think now
I think it is 25,000 and
that's the next milestone.
I think Modi's hat trick in 3 state elections clearly shows the underlying sentiment of the people of India. I think people have voted for political stability and voted against freebie culture, which had been announced by opposition. And a lot of brokerage notes that you read, Nandita, will point out that the fiscal discipline that the government has been able to keep at the center probably will be replicated at the state level as well, which will probably benefit as us as a country. And given the fact that there are the state government elections in a few states now, and then the central government election in May 2014, I think that will help the momentum for the BJP in 2024, clearly, which has been, remarkable progress. And I think now that the Nifty is at record highs, today the Nifty Bank also hit a record high, full 1600 points, moving for the Nifty Bank, and mid-caps already are at record highs. So I think the catch-up which was supposed to happen, that has finally happened with the banks, with Kotak Bank, HDFC Bank and ICICI Bank contributing to nearly 30% of today's gain on the Nifty and Bank Nifty.
That's correct, Yatin. In fact, if you look at some of the comments coming in from market experts, I was just listening to Madhu Kela. He said, next 5 years will be Amrit Kal for stocks, right? And he also said that PSU stocks, even though they have run up quite a bit, they are still cheap and they will still take the leadership going forward. A lot of these experts that I have also been speaking to, they're now talking about 22,000 levels, at least in the run up to the grand finale, which is the 2024 general elections, right? But 19,600 is the base that is emerging right now, which is what Sushil Kedia was telling me in the morning. And even Saurabh Mukherjee, I had a chat with him today. He was pointing out that how foreign investors had turned a little jittery, in the last 5 to 6 months. But now, with this clear mandate, policy continuity happening as well, there is a renewed confidence when it comes to the FIIs, right? And they will look at pumping in money into the Indian markets. And of course, rate cycle also has topped out globally. And, rate cut hopes of April or May, these are some of the factors that would lead to more foreign inflows going forward, and that means that money will now flow into large caps. So large caps, that will be the flavor of the market going forward, even though it's the domestic money that has restricted the rally that we have seen in the mid cap end of the markets. But aside of that, Yatin, let's take a look at some of the stocks that have been doing well today. I want to point out on the Nifty, Eicher Motors has surged 8% nearly. Adani Group of stocks, I mean, they've been on a tear rather, Yatin, over the last 3 sessions. I think, even market cap has got a fair bit of boost, and looks like the Hindenburg issues are a thing of the past now when it comes to the Adani Group of stocks. BPCL, SBI, all these ONGC, all these PSU stocks continue to lead, and, aside of that, losers were few and far between today. So HDFC Life, Britannia, Wipro, Titan, here and there, you had just about 4 to 5 losers on the index. On the Nifty Bank index also, Yatin, all of the stocks were rallying in trade. In fact, as you pointed out, 1600 point surge that has come in on the Nifty Bank index. Aside of that, Yatin, anything that you are spotting in the mid cap end of the markets, even though today it was not just about stocks, but still, if you point out anything that
in the movers, not agnostic to mid caps or large caps, we had the oil marketing companies which surged in trade. HPCL, BPCL, all of these stocks moved. ONGC Oil India among the OMC the oil marketing and oil exploration space also moved, because Oil India has the Numaligarh refinery, and ONGC is the promoter of HPCL, so a rub-off effect coming in those stocks. As far as mid caps are concerned, Adani Green continues to rally. That stock was up 10%, GSFC up 10%, Central Bank of India, and a number of these PSU banks were rallying in trade, especially HPCL and Central Bank of India. In those PSU names, continuously momentum coming in. What was not doing well in the F&O market was the likes of Z, stock was down 4%, Delta Corp down 4%, Bikaji Foods, that stock also saw some correction of nearly 4%, Nandita.
All right, Yatin, on that note, let's bring on board our guest for today. Joining me is Deven Choksey, who's the MD of DRChoksey FinServ, joining in. Great to have you on the show. Deven, given the kind of euphoria that we have seen on the street today, 21,000 literally almost knocking, 22,000 is a given till in the run-up to the general elections. What would you say?
I think good afternoon. Well, I think the most of the indices level will definitely, reach to newer heights. There is no doubt about it. You look at the fundamental strength of the market, and look at the direction this market is assuming for next 10, 12 years. This market and the economy, they are assuming a direction of around $4 trillion journey, which is current. Likely to reach to $12 trillion journey by 2035. So in next 10, 12 years time, suppose if this is the kind of a outlook that we carry in the market, it is absolutely possible that we are going to see higher amount of money coming in from every corner, be it local source, be it domestic, be it global source. I think that is where the long-term fundamentals are already planned. Now, in the shorter period of time, there can be every kind of situation possible. Pre-election rally of 10-15% distinctly possible on a base of 20,000. If you end up having around 10 to 15% kind of a rally, you're talking about 23,000, 23,500 kind of an upside, to the market in the election period, which is distinctly possible. So I think one should possibly look at the momentum, near-term undercurrent. At the same time, the planning for investment in building the portfolio has to happen over a longer period of outlook that one carries. And this is where we feel more comfortable that the outlook for the longer period of time remains absolutely convincing and growth oriented. So the new funds will come, liquidity driven push will come. At the same time, the fundamental rally will continue in the corporate earnings side, and so would be the attraction to the investors in the market.
Good afternoon, Deven. Yatin here, joining the conversation.
Yes.
I just saw your message wherein you said that the Indian women will win the elections for BJP in 2024, and probably 400 seats for BJP in the Lok Sabha, and water in every tap. Ayodhya Mandir opening somewhere post 20 January is something that we'll be watching out for. So a lot of steam still left from the political side for BJP, and hat-trick by the Modi government clearly has sent big message to the global economy as well as investors globally. Do you think the FI investments which were lagging till now, or probably the domestic funds which were sitting on cash will now hurry up their investments, and probably we could anyway see a big pre-election rally till May 2024?
So good afternoon, Yatin. And few thoughts on the subject itself. The 2019 election was largely won based on the promises then given about giving gas cylinders, electricity, toilets and housing for everybody. This particular 5-year period in which one of the key point of rural economy is the providing water to every household on tap. And if this ratio goes above 90-92% by end of February, March, which is expected for having all the houses with the water tap, then possibly you will see the massive surge in the vote share for BJP in this particular election, because the women have been actually benefited significantly because of these social reforms that the government has carried out up till now. And that's where probably I would think that the 400 plus seats are distinctly possible. Coming to the fund flow into the economy, today you are having a situation where the FIs have put in approximately less than $1 trillion into Indian economy, which is around $0.6 trillion into economy. On the other side, the China has ended up attracting $3.5 trillion into the stock markets ultimately. In my viewpoint, even if a slightest of push has to happen, towards India, you are likely to see, a surge in the fund flow into the country. Today, the situation is that we will require new papers in the market, and it is expected that by 2025-2028 period, in 3-4 years, we are likely to see additional 500 to 600 new companies coming into the market with a fundraise of around $600 to $700 million. Given that kind of possibility, pretty sure that I think the amount of money which will flow from domestic as well as the global sources is going to be very high. In the near term, the mid cap and small cap companies, which have probably been quoting forward basis at around 25 times, each is appearing to be a bit expensive. Whereas I think the forward basis, the Nifty 50 companies are quoting it around 18 times on outlook, or forward earning outlook. I would think that I think there is a possibility of a swap or for arbitrage, wherein the mid cap, small cap might be seeing a profit booking, and I think the larger amount of money would come into the large cap companies. That is where possibly I see the opportunity of new money getting into the markets, into some of the large companies which are up till now not been participating in the market. This is where I think you are seeing the value picks also emerging in some of the quality names where suppose some of the banks are there. They're talking about doubling the size in next 4 years time. Companies like Reliance, I think they're talking about completing their investment program in renewables in 24-25, and thereafter I think reap the benefit out of this particular expansion that they created. So to my mind, I think we are going to see a surge of new investors, new money coming into the market, which will propel liquidity-based market rally. At the same time, fundamentals are remaining strong in some of the large cap companies. So new funds are expected to come.
Right, Deven, in the run-up to the elections over the next 5 to 6 months, which pocket do you think will take leadership? Do you think PSUs will continue to lead? They've already seen a fair bit of run-up. Or would you say it could be something like in FMCG that has underperformed largely? Because private banks, we've seen a very good rally. Of course, we've seen the Nifty Bank Index hit a fresh high as well. So do you think that this private banking is one pocket that will regain leadership in the coming months?
So in the near term, there is no denial of the fact that PSBs will get probably re-rated. Public sector banks will get re-rated because they're quoting at a valuation which is far more comfortable as far as I think downside risk is concerned. So quite possible that traders' money will get more into the public sector banks. But however, the serious investors' money will probably stay with some of the large size corporate banks. The reason is very simple. Out here, the larger the size of the bank, larger would be its participation into the growth program of the economy. So obviously, I think if your balance sheet is 22-24 lakh crores AUM, then certainly I think you would be the first one to be tapped by every borrower, largely because of the fact that I think you are having the balance sheet size to lend. So in my viewpoint, I think the investors with the 10 to 12 years of horizon will stay with the compounders in corporate banks, which are larger size banks. And those who are basically traders who are playing the arbitrage on the valuation, they might possibly, I think, buy the public sector banks at this point of time because I think there is a case for re-rating into them as well. The view remains very, very clear. Growth has to be given the priority. Balance sheet size will have to support. Big is getting bigger. That is a clear-cut established norm. So certainly, I think the long-term investors, like some of the FPIs and the provident funds, insurance funds, etc., they would possibly try and buy the bigger companies which are showing the signs of doubling every 4 years or so.
Absolutely. Deven bhai, there has been a lot of mixed reaction when it comes to the Nifty contribution. Reliance Industries, the share has been underperforming. HDFC Bank recently has been trying to catch up. Do you think now, once again, all of these large cap stocks which were lagging should now provide leadership if we were to look at 22,000 or 23,000 in the short term on the Nifty? Reliance Industries to be specific, because you have been prominently covering this on the street. What are your views and talking about their businesses like retail and Jio? Do you think they are mature now for a fundraise or probably a demerger?
Well, I think 2-3 important points. One, definitely Reliance has not been participating enough in the market. But if you look at the history, it has a tendency of participating, I think, in the 4-year period, only 1 year. I think balance 3 years, it has remained in the range all along, I think, all these years. So I think if 2024 is a period in which it is supposed to participate, my take is that I think the time is quite closure. Why? The reasons are also very clear. On one side, Jio platform is growing at a 20% rate of growth as far as their EBITDA is concerned. So if this year they produces 120,000 crore worth of revenue, 60,000 crore would be the EBITDA. And that will continue to grow even at a 20% to 25% rate of growth, with home fiber and enterprise fiber getting launched and succeeding into the revenue as well thereafter. Second thing is retail business. Retail business is also going at closer to 20% rate of growth. And this is likely to continue because the entire omni-channel model that they have created, wherein on the ground 18,000 plus stores and at the same time web-based presence, including with JioMart, I think the numbers are going to get produced immediately because of this infrastructure capacity that they have created. And once they bring in the Jio Finance along with to lend money to merchants, in my viewpoint, I think retail business will have the ability to take off, much bigger than what they are currently doing, because the money component would be easy for the merchants to come and join the Jio platforms and the retail business. The conventional businesses, which is oil and gas and the exploration business, is also growing at a rate of 30% plus because of the new gas find. Then now already they're into the production. So certainly, I think that is also contributing. Refining business and the petchem business, they are driven more on the possibility of, higher amount of comfort level coming in because of the change in the feedstock and the profits could possibly show relatively better performance going forward. Whereas the volume and the revenue would probably grow at a single digit rate of growth for these companies because they are matured and they're growing steadily with the size of the economy. Overall, Reliance remains absolutely convincing play. Renewable is getting into the commercial operations in 2024-25 with variety of the companies within that in the ecosystem. In my understanding, I think with the hydrogen, green hydrogen business, I would think that the feedstock cost, the electricity cost for the company will come down for the refinery segment. And at the same time, I think they would have better ability to supply the green hydrogen to the other areas. So I would remain extremely convinced and bullish about the prospects which Reliance is building in these businesses, and probably think that the markets would give a response. Currently, the Indian mutual funds cannot buy more into Reliance largely because of the exposure limit. The global traders who are coming into the market, I think they are largely, hedging the portfolios. So they are not adding further position. But sometime, I think when they see the larger size of the profit getting into the balance sheet, there has to be a surge into buying as far as Reliance is concerned. That is where you can expect a price of around 3,200, 3,500 in a period of time from now.
Right, Deven, the last question really, do you think it's an opportune time to rebalance portfolio, perhaps rotate funds out of NBFCs, especially after the RBI's crackdown on unsecured lending, to, perhaps CapEx plays, something like infrastructure companies, L&T for that matter. Do you think it's an opportune time to do that?
Well, I wouldn't be in hurry to any kind of a portfolio shift because I think some of the businesses are absolutely fundamentally convincing businesses, which we explained, which we talked a while back. RBI's regulation is largely to check the unsecured loans growing and become uncontrollable. I think well-capitalized balance sheets like Bajaj Finance or for that matter even Jio FinServ whenever they start, I think they remain relatively more strong players than otherwise. So I'm not too much worried and concerned about that particular aspect. As such, on the ground, with the size of the economy growing, the consumer is spending and is consuming credit as well. So that's where positions of Bajaj Finance and ICICI kind of bank would remain very, very strong going forward. We remain convinced we do not want to abruptly part with our portfolios. We believe that if we are continuing with the journey of 10, 12 years, in between there will be some period wherein the profit booking will come into the markets. But that does not take away the larger prospects that some of these companies are sitting on and delivering in form of results. So no abrupt switching, probably stay invested with quality ideas. And as and when get an opportunity, I think start investing into some of the good quality emerging companies which are coming into the market through new business.
All right, that's the view then. With that, Deven, thanks a lot for taking out time and joining in this afternoon. Appreciate your taking out time.
Thank you so much.
Well, with that, Yatin, knocking at 21,000. Hopefully, if I've read some reports where analysts are saying that markets or Nifty is in the overbought zone. Perhaps we could see some bit of profit booking, or perhaps we could be knocking at the 20,000 mark this week itself. But of course,
Nandita, just because you used the word overbought, I just came from a show and I was speaking to Arpan Shah, is the technical analyst at Monarch Net Worth Capital. He said that the markets can be overbought for some long period of time and can be oversold also for some long period of time. So if you were to think that the market is overbought, yes, it is, but you know, whether or not you should book profits or probably short the market is not the correct answer, because you need to still wait and watch. And as you were saying, that 21,000, 23,000, some people are talking about 25,000. One thing is, you know, quite clear, that from here on there will be a bull market, and a pre-election rally has just started.
Well, that's the word from you know, all the analysts that we have also spoken to today. But with that, we've come to the end of this edition of Closing Bell. You know, thanks a lot for tuning in. If you have any comments, leave them in the comment section below. But of course, come back and join us tomorrow morning at 8:30 a.m. when we will be taking up all your stock-related queries. Of course, those queries need to be answered given the fact that we've seen such a good up move in almost all the stocks on the index today. But goodbye from me and Yatin. Thanks a lot for tuning in. Have a great evening.